I bought it at $45.70 a share, and now it's at $51.62. So I've made $254 just from the actual, value itself. This doesn't even include dividends, which I've also made. Hey guys, what's going on? Today I want to talk to you a little bit about how to make and build passive income through dividend investing on the stock market. Now, before you guys click off because you don't see yourself as an investor and you just want to earn passive income, let me explain. You buy a solid, stable company such as Coca-Cola or Microsoft or Apple. Just pick something that isn't going away anytime soon, and you're going to invest some money into them using an online broker. And every 4 months, they will send you either cash or you can set it up to reinvest the dividends that they pay you. So you've got $10,000, and let's say you want to buy shares of Coke. So the current price of Coca-Cola, or KO, the stock ticker, when I was recording this is $51.73. So you're going to want to take $10,000 and subtract 7 from that. That is the typical flat rate that online brokers like TD Ameritrade will use. So you want to go ahead and get that out of the way, and then you'll have the actual amount that you can invest, which will be $9,993. So now we want to take $9,993, which is the amount you have to invest now, and divide it by 51.73. That'll give us 193.17 something. So 193 shares of Coke basically is what you can buy. So here's where it turns into passive income. So each of these shares that you bought, all 193, are going to pay out 40 cents every quarter. So every 3 months, each one of these shares will give you 40 cents. Throughout the year, each share will give us $1.60. So take that 193, multiply it by 160, and we get $308.80 in dividends per year. That might not seem like a ton of money, especially for a $10,000 investment. Where this gets really good and where you have to show a little bit of discipline is setting up a drip. So what is a drip? It's a dividend reinvestment plan, and what this will do is take that $308.80 and it'll buy more shares of Coca-Cola, which means more money off dividends the next year. So once you've done that, quarter after quarter, year after year, you'll take the dividends and reinvest it into more Coca-Cola, which means more dividends, which means more money every year. So you might start off only making $308.80 your first year. By the second year, you might be making $310. The third year, you might be making $314, $318, $325. It just keeps going up slowly but surely, and that's what is so good about this. It's solid passive income. It's not something that's volatile. It's going to be something you can depend on. So this doesn't even include actual market gains, which, like the actual stock price going up and the value of the stock. So I'm here on my TD Ameritrade now, and I just want to show you guys my investment in Coca-Cola. I put about $19.75 in here. So we're going to go to my cost basis right here, and we've got my unrealized gain / loss because I haven't sold the stock yet, which I don't plan on selling the stock because I want to keep this long term. So yeah, it was $19.65 was the cost. I bought it at $45.70 a share, and now it's at $51.62. So I've made $254 just from the actual, value itself. This doesn't even include dividends, which I've also made, and I think it was $31 maybe left over in dividends. So it's gonna keep going up. So next year I'll be at 44 shares. The year after that, maybe 46, depending on how the dividend's doing. And yeah, so it's just gonna keep stacking up. As long as you set up a dividend reinvestment plan, which I'll also show you guys how to do real quick. It's super simple. But, if you want to take the cash, that's fine too. $300 a year is fine to take for sure. But the power of this investing and the passive income will come later on once you've built it up. So if you really want this for passive income now, I would not set up a dividend reinvestment plan. But if you want it later in the future, make more money, definitely set this up. So I'm going to show you guys how to do that now. And you're going to want to go to your stock and ETF dividends. This is on TD Ameritrade, which I showed you guys in my last video how to set up an account on here. If you use someone else, it's going to be a very similar process, but this is just the broker I use. So edit enrollments, and then you want to enroll. ACB doesn't have a dividend, as you see over here, but these two do, so I'm going to enroll these. And Coke has a 3% dividend yield. Like I said, or I might not have mentioned this yet, but 3 to 4% is typically a good dividend yield because it's not too high, not too low. And yeah, so I want to show you guys after this how to find a company to invest in. And yeah, so now you've got your dividend reinvestment set up. I want to show you how to do that. All right, so we're going to use Coca-Cola here as an example for finding strong candidates in stocks that you should be investing in. And so the first thing to look at is definitely the yield. So we're going to go to KO here, which is Coca-Cola, and the yield, let's see, we've got it here, 3.12%, which like I said, 3 to 4% is good. If it's any higher than that, typically stocks with like 7% yield or something, they can't maintain that year after year. So sure, they might have a 7% yield one year, but the next year it might go down to 2% because they can't afford that 7%. So the sweet spot, in my opinion, and a lot of other opinions, is 3 to 4%. The average, I believe, is 2.25 or something around there for the S&P 500. So if you can get anything above 3%, that's going to be good, especially with a company like Coke. So we know the dividend yield here. And now the next thing that is even more important, honestly, than the yield is their history of dividends. So you just want to look up Coke dividend history. And I found this on the NASDAQ, and it shows their past dividends. So here it's from 2013 to 2019 here, and it shows their cash amount of dividends. And as you can see, every single year it goes up. They haven't missed a payment, which is always something you want to look at. You want to make sure, you want to make sure that they are not missing dividends. Like, oh, we couldn't afford it this quarter. Next quarter we'll double it. That sort of thing. That's not a good company. So obviously, if a company is increasing their cash dividends and it's just going up year after year, it's going to be a solid company, especially if they've been doing that for 10 plus years. ExxonMobil is one of the top dividend stocks just because they haven't missed one in so long and it's been going up for so long. So you just want to do some research on this to make sure that they're not missing payments and things like that, because that's important. You don't want to miss payments and not get paid. So definitely the yield is important, but I would check this out too, the dividend history for sure. So the last thing that you want to do is honestly just use some research and intuition to see if the company is sustainable. If you think they're going to keep going on, I mean, I don't see Coca-Cola going anywhere shortly in the foreseeable future for sure. If you don't want to buy into things that are really volatile, and like here, if we go to the 1 year for Coca-Cola, it looks kind of volatile, but it's not, because the numbers over here, it really just fluctuates between $46 and like $52, which is not volatile at all. Like, that's just like what, $6 a year that it kind of fluctuates around, which is really good. And if we go to 3 years, it goes from 42 to 52, which is very good. If you look at something like one of my other stocks, Aurora Cannabis, it fluctuates between like $2 and like upwards of $9.50, like $10. That's a big percentage. The actual dollar amount's the same, but the percentage that it changes is just ridiculous. So you don't want to buy companies like that for dividend investing. You want to find something steady that's not going to go anywhere anytime soon. Make sure it has a good yield. Make sure they're not missing payments and that they are constantly increasing their dividend, and you'll be good. So that's basically all I have for you guys today. This is just a beginner's guide to dividend investing and really just, making passive income through the stock market. If this helped you guys, be sure to let me know in the comments.